Good morning and welcome to News Views. I'm Judy Hsu. Today we're looking at the real estate market here in the Chicago area. Some reports about a possible housing slump are troubling, but your perspective may depend on where you live and whether you're buying or selling. Joining me this morning to share their insights are Tommy Choi, president of the Chicago Association of Realtors, Orphie Divounguy, chief economist with the Illinois Policy Institute, and Paul Wells, who is with RE/MAX of Barrington, and he is also vice chairman of Midwest Real Estate Data, which is our area's multiple listing service for realtors. That's the MLS that you all probably know about. Good morning and welcome, gentlemen.
Good morning. Thanks for having us.
Well, thanks for joining us to talk about this topic. I'm going to start with an article that Orphie actually wrote at the end of last year, end of 2018. And the headline read, "Chicago anticipated to be the nation's weakest major housing market in 2019. That was based on a report by Realtor.com. Let's reassess right now, right? Going into the last quarter of 2019, how accurate was that forecast in your opinion?
I think my forecast was pretty good. We're seeing that Chicago, compared to other states, other cities, is slowing down. You got cities like Dallas, Phoenix, San Antonio that are doing very well because they are seeing some strong population growth. Of course, population growth means that demand for housing in those places is rising. And so if there's a slowdown coming from the U.S. economy hitting some strong headwinds, you're going to see that Chicago is going to be hit even stronger than other places.
And Tommy, I'm going to bring you in on the city's perspective. I mean, was this one of the weakest, areas in the country?
That's a great question, and that's a question I get a lot, housing market.
Yeah.
And what I've learned is really there's two ways to answer that, and it's by either saying it's a buyer's market or a seller's market. And right now, what we've been going through is a shift from a seller's market towards a buyer's market. So what the data is saying is, yes, sales are down, properties going under contract are down, prices are still at peak right now. And so it just means for sellers, you just need to have some patience now. We're not seeing as much competition, multiple offers, bidding wars like we used to the past 5 years. So it's just a little shift to stabilization.
Now in Cook County, I'm sure you have heard people talk about the property taxes going up in some areas north of 10% in 1 year. Is that impacting the housing market?
It is. You look at the data, especially in the downtown metro area, almost half of the market of buyers are under the age of 35, and they're very savvy and they're doing the numbers, they're doing the math. And so when you look at your carrying costs of owning a property, those property taxes are definitely being factored in, and some affecting the home affordability.
And Paul, are you seeing that in the suburbs? Are the buyers a little bit different?
They absolutely are. And going back to taxes, the interesting part is there's a new federal deduction cap of $10,000.
Right.
So when you get in the higher ranges, both in the city and in the suburbs, it's really affecting that upper range. But the market overall, in our eyes, and probably the city eyes too, is it depends on who you are. Are you an investor, a buyer, a seller, or a renter? And those different markets are all affected differently. If you're a buyer right now, as Tommy said, it's turning into a buyer's market. If you're a renter, the rents are skyrocketing, and it's putting people in some incredibly tough situations. But on the inverse side, if you're an investor, you're making more money than you ever have on your investment, i.e. holding renters. So it's for every person looking at this as a bad market, there's another person looking at this as a good market.
I want to ask all of your reaction to this, another report. This is by Crane Chicago Business in April of this year. They reported that for every suburb winning in this tough housing market, 2 are losing. So think about that. They're saying that 9 out of 121 suburbs in Cook, DuPage, Lake, and Will are beating the housing slump. 9 out of 121.
Well, what it really comes down to, in my opinion anyway, is price ranges.
Okay.
You've got a robust price, a robust market in anything under the median price, no matter where you're at. The median price overall in our MLS is about $245,000. So anything at or below that is very strong. So if in a suburb that's at or below that price, the numbers are flying. The homes are going quickly. It's affordable for people to buy homes. On the other hand, if you're above that, you're in a very, very oversaturated, over-inventoried market.
Orphie, your reaction to that article?
I absolutely agree with them. So sales are down, and the time it takes to sell a home has increased. And that means that homeowners are going to have to concede on the price a little bit and adjust the price downward. And we're seeing that. So in the last year, home prices, the median home sale price only increased by a meager 0.6%. Compared to 4.4% on average over the period of the recovery. So, homeowners are going to take a hit in this market.
Okay, we're going to pause our conversation right there. I know Tommy wanted to add something, but we'll come back and get Tommy's reaction and also look ahead, of course, to 2020. Put you all down on record. We'll be right back. Welcome back to News Views. I'm Judy Hsu. My guests here this morning are Tommy Choi, president of the Chicago Association of Realtors, and Orphie Divounguy. He is the chief economist with the Illinois Policy Institute, and Paul Wells with RE/MAX of Barrington. Okay, we're going to pick up our conversation from where we left off. Tommy, you were going to add.
I think Paul and Orphie would agree. While we're talking on a macro level with what the housing market looks like, especially downtown Chicago, we're a city of 77 neighborhoods, and on a micro level, to Paul's point too, product, price point, neighborhood, some are seeing and outpacing the market, right? And so you're seeing success. So it all depends, and that's I think the best part of Chicago, because we are a transient city, that you're always seeing a revolving door of activity, and depending on the price point, neighborhood, and what product you have.
And also when it comes to the city and the suburbs, there's a lot of talk about outmigration being one of the main factors. Agree?
Absolutely. Yeah. The demand for housing depends on people, right? So if we have more people moving into the city, we're going to see demand outpace supply. Prices are going to increase. It's going to take less time to sell your home. But Chicago has lost population for 4 consecutive years. And the places that are gaining people are Dallas, Phoenix, San Antonio. Those places are seeing robust price increases in the housing market, and they're also seeing their sales go up, continue to go up.
Well, other factors for a slowdown?
Well, I think one of the things that is affecting things, and we can't tell exactly how it's going to take place, but interest rates are certainly an indicator of things going on. As the Feds decrease their rates, it usually is going to bring not too much of an effect on mortgage rates, but they're stable at about 3.5% to 4%. My concern next round is if rates go up, people are going to be shocked. We've been sitting here so long at low rates, it may artificially slow the market even more. And in terms of the actual numbers I'm saying, and when I've traced this back, it takes about 18 to 24 months for the prices to be affected by the market conditions. Right now we've got less sales, and we have for a while, yet the prices are stable, if not up about 1%. That's going to start, that average price and median price is going to start going lower as we deepen in the less sales. As we see less transactions actually happen, we're going to see those prices go down dramatically.
Well, I'm going to follow up on that. I don't know how much you all love predictions, but we're going to talk about 2020. You're the expert, so people want to know, when do we turn that corner? What's going to happen? There's a lot of talk about an expected recession coming up, a slowdown in the economy. Of course, we have the election coming up. Your thoughts as we go into 2020.
So there's a lot of policy-related uncertainty. People are worried about what's going to happen next year. You got an election in D.C. You also have, in Illinois, the progressive income tax going on the ballot.
Yes.
So lots of people are going to wake up after election day not knowing what the tax code is going to look like. And that causes a lot of uncertainty. And when there's uncertainty, people are not willing to sign a check to buy a house, to buy more housing. And so those are my fears going into 2020 and 2021. I expect a slowdown, and the housing market is going to take a hit.
I feel like this is a potential future bad meme here of my prediction, but the one thing, piggybacking on what Orphie said, the other piece of it right now is a housing stock in the city, lack of new construction and lack of affordable new construction. And so people that do want to move up, there's not a price band or a product right now for them. And so that's also causing some people to leave the city and look at other options. So that last election year, no matter what side of the aisle you sit on, it's going to make an effect and impact on our market as well.
Now, specifically in the city, what areas are you seeing that are still performing really well, and what are the weaker areas?
I don't know that there's any that are weaker, but the ones that I see that are performing, outpacing the market, are markets that I personally work in, and that's the north side of the city. So you're seeing that. The West Loop obviously has been thriving the last 3-4 years with McDonald's coming there, Google building there, a lot of those HQs coming back to the city. So you're seeing that, but still ultimately what's coming on is that you have to be priced well, you have to be patient,
Okay.
and be ready.
So Tommy mentioned the HQs coming into the city, which means some of them are leaving the suburbs. Your, outlook for 2020?
Oh, they definitely are leaving the suburbs. However, I still believe that people have to live somewhere. And I think with rental prices going up so high, combined with mortgage rates so low, that there's still going to be an incentive for people to buy homes. And when you look at the last 10 years, we're at incredibly low inventory levels of home for sale. That is still going to be a driver. The less homes there are for sale, the more stable prices are going to be. The rest of the country is just starting to experience what we've been experiencing for the last 5 years. This Chicago and the Chicago area overall is an incredible value compared to any other major market. We've got, in some instances, we're less than half the cost for a home. And again, with interest rates remaining low and with some of the incentives that are going to be created for people to come here, I have actually rosy picture for the rest of the year and for the next couple of years. I think the lack of inventory is going to stabilize things much quicker here than it is for the rest of the country.
All right, well, I'm going to have to leave it right there, leave it on that positive note. Maybe we'll come back in 2020 and reassemble and reassess what we talked about here today. Thank you so much for joining us here on News Views. And thank you for joining us. We hope you enjoy the rest of your weekend.
Everything you need for summer fun is on sale at the Great